Hello from me, Curtis Hutchinson and Philip Northard to this special weekday Motor Trade Radio podcast. We're delighted to welcome back CAP HPI's Director of Valuations, Derren Martin, for his regular monthly review of used car values. Well, Derren, a lot's happened since last time you joined us. We've got another new Prime Minister, another new Chancellor, and that's before we go on to interest rates and inflation. So how's your October been?
Yeah, it's been, hi Curtis, hi Phil. It's been an interesting month. Values have moved, but I did actually flippantly put in the monthly overview that if your car's been in stock for longer than a prime minister's been in the chair, then maybe you should be looking for it.
Well, that's your new benchmark, Derren.
That 44-day point.
40,
that's how long
44-day turnaround.
It's not good, but like you say, probably would you say there's more or less turbulence in used vehicle values than there is in number 10?
I think definitely less less turbulence in used car values for most of this year. Actually, it's been a pretty stable environment, and that's continued. So it's but there's lots of moving parts, as we always say. Devil's in the detail, but at the moment it's all holding up pretty well for the time of year, actually.
I mean, if we get onto that, we think the editorial is now available, and it'll be through your social channels or on the CAP HPI website. But when we last caught up, we were talking about a slight increase into the month of 0.3%. I think that was following a slight drop of 0.3%. And that was, so we've had a kind of succession of small movements month on month over a period of time. Do you want to talk us through with what's been happening and that headline figure at 3 years 60 as we sort of from October going into November now, and how that sort of compares through the months?
Yeah, so it's 0.5% down at 3 years 60. It's similar at younger ages as well, 0.4% down at 1 year. And that we've seen very small movements, probably since around April, May time. It's been a sort of negligible movements down, really. And compared to previous Octobers, that's actually the strongest October. So the smallest downward movement we've had, apart from last year when values continued to increase after that crazy few months. So it's the sort of the calmest or the most positive October we've had since I'm looking back at records sort of early years of this century. So it's very it's pretty robust, and we were expecting it to have dropped away a little bit more than it has done, just because it's all doom and gloom everywhere, and we've sort of been joking about what's happening in politically, but for policies to be written and then ripped up in a calendar month, you'd have thought that people were more concerned with their money and more concerned with cost of living. But most of the dealers that we've spoken to are they're pretty upbeat about things. It's not been quite as good in October as it was in September, but that is normal, and the retail market remains pretty strong, I would say, and accordingly values haven't dropped by much. So retail is okay, and I would say that the trade market is even stronger than that. So it's a fairly positive picture at the moment.
And then before we go into segments, models, and fuel types, were there any interesting movements across the different age bands? Especially you mentioned some of the younger profile cars. What's stood out for you this month?
Younger cars have performed okay. It's it's more sort of price point, I think, than sort of age of vehicles, and it's also sort of fuel type as well. So there is lots of sort of devil within the detail, as I always say. But younger cars, I mean, there's a shortage of them in the market. There's been 2 million less registrations over the last couple of years or 3 years. So younger cars are doing okay. They've not dropped by much. Anything up to sort of 3 years been doing okay. And then you get to 10-year-old cars and they've hardly dropped at all. So again, it's those price points, and we're seeing, I think maybe that sort of 12 grand retail price point is a bit of a sweet spot. and cars below that are doing well. If you look at sort of sectors, it's those affordable cars that are doing well as well. City cars have been the strongest over the last few weeks, and that's off the back of sort of strength over the last year, really. And if you look back at some cars that are sort of city cars worth almost sort of £3,000 more than they were 3 years ago at the 3 year point, the same age and mileage car. So there's cars that are worth a lot more now than they were previously, but they're holding up all right. So it's across the board really, and everyone's asking us, is there a crash coming? And we don't think there is a crash coming, and there hasn't been a crash coming really for a number of months now. Despite the cost of living concerns, used cars are robust.
And this move towards those city cars, is that driven by affordability, owners looking to downsize maybe out of SUVs?
Yeah, there's a bit of that, and also there's not so many of them produced as new cars now because the OEMs are sort of focusing on what makes them more money on
Yeah.
SUVs. So there's less new city cars that get introduced, and yeah, I think you've got people that are potentially coming out of a more expensive vehicle into a city car. Maybe that's their second car. They realise they don't need a 5 Series and a 3 Series, so they can get rid of one of them and get a city car in, or yeah, that type of thing. So it's just a cost effective way of getting around town now, isn't it? So they're also, from a dealer's perspective, you can stock city cars and be confident that they will sell and quite quickly, and you haven't outlaid a load of money on them, which you can do on sort of more aspirational vehicles. And we have seen a little bit that aspirational vehicles are not they've kind of dipped a little bit, and there's having to be some repricing on the higher end and the seasonal cars, the convertibles, and that more aspirational end, whereas the necessity purchase is still alive and well.
I suppose, like you say, with that you can get 2 or 3 city cars for the price of some of those high-end, larger premium product, can't you? So if if there's a shortage of product and you need volume on your forecourt, or you've got limitations on your stocking facility, then you can get more for your buck in many ways, can't you? So, I mean, we've talked to, we were catching up pre the recording, and it's been a topic of conversation, but do you want to talk us through what's been happening in the fuel type market? Because as we talk about every time around what's happening around EV, which you and I probably get asked a lot, when's the diesel crash coming and petrol and all this lot, but we're in a supply and demand. But particularly, I think EV stands out this month as being a significant mover in certain areas.
Yeah, I think fuel type's been probably the most interesting thing to look at this month, and diesel's actually been the strongest. So diesel values over the course of this year have come down by the most. So there's definitely been some downward movement on diesel, but it feels now as though maybe they're good value, and they've not dropped by too much at all. I think they've dropped by the smallest amount, which is 0.3%, which is less than £100 at 3 years old. Then you've got sort of hybrids that have dropped by 0.6%, petrol on average by 0.7%. But then when you get to electric vehicles, they've dropped by 1.3%, which is almost £500 at 3 years old. So I think you've just got there that part of that is the aspirational purchase that I talked about. EVs are still an aspirational purchase, and maybe that's not happening. You've also got to look at your electricity bill and how much it costs to actually charge these cars. And if you can't charge it at home all the time, then it's not such a clear-cut choice to go out and buy an EV. And overall, EVs are expensive in the used car market. They are expensive. We've still got some EVs that are over the new price. That's obviously not sustainable. But generally, apart from a few models, EVs are expensive. So the consumer is sort of switched off to a certain degree on buying them at the moment. And also dealers are being a little bit risk averse and are not necessarily stocking EVs in the quantities that they were maybe a month or two back. We've also seen an increase in the amount of EVs that are for sale as a used car now. So in the trade market, I think there's 4 times the number that there were a year ago. So there's a lot more of them about. They are expensive, and they're not a clear-cut decision really for a consumer to buy one. So yeah, bearing that in mind, we have seen some drops on EVs, in particular on Tesla. And there's been more Teslas appearing in the market. And over the last couple of months, we moved values down in September. So Model 3, for example, moved down almost £1,000 in September, nearly 3%. And that's continued in October. They've moved down even more in October, and by over £2,000. So over a couple of months, that's sort of £3,000 off a 3-year-old Model 3. Model Y has been affected as well, and they've come down in value. But we still have examples of Teslas that are over the new cost. So they had to come down at some point, I guess. And as you get more supply in the market and demand drops off, that it's fairly inevitable that those things will happen.
And I think just to that point, I mean, I think you mentioned it in your editorial. We've got to remember where some of these prices were at, don't we? That we are seeing these drops, but EV did accelerate at some level, didn't it, through the short last year?
Yeah.
And it's that all supply and demand, isn't it? They're now starting to return to the market and find their place and their value in the market. It's not that they're not necessarily selling; the transactions are taking place, but it's just finding that price point in a used market that maybe not quite ready for that used volume of EVs entering it.
Yeah, definitely, and I think that's a really good term that they have to find their level, and that's kind of where they are. Then they're not dropping off a cliff, but they are. The prices are being adjusted down, and it's all very much supply and demand. So you get more supply in the used market, and dealers not buying them to the correct levels because they don't want them necessarily, as many of them on their forecourt, and consumers aren't necessarily buying them in numbers or having a bit of a considered purchase on those, then prices will adjust. It's not a crash. Keep reiterating that, but values are probably becoming sort of more reasonable for those for some of those models. But it's not just Tesla. We've seen it on BMW i3, Audi Q4 e-tron, Nissan Leaf, even VW ID3. They've all seen values drop this month. So there is just a little bit of a pause on sort of EVs, I would say, at the moment. But that might not be a continued trend. But diesels look quite attractive now price-wise, and maybe EVs are just a little bit too expensive at the moment.
And Derren, every month in the editorial, you ask dealers about their stock levels and also their views on consumer demand. So, what have they been saying over the course of October?
It's been interesting. It's been pretty mixed. You've got some that are. I mean, I think footfall overall dropped off in October compared to September, but it always does that, and so it wasn't a massive shock, and it's not to the levels where everyone's saying, "Oh, cost of living concerns are really affecting the market." I think they are doing okay. They are sort of not stocking up in huge droves. I don't think I've spoken to a single dealer that is saying, "Yes, we're buying a load of stock now, ready for January." Whereas this time last year, that was going on across the board. So I think there's a little bit of wariness out there about what comes next, and obviously the economic news is not good at the moment, and has been volatile for some time. But I think overall, retail consumer demand is okay. It's as we've sort of said, it's a necessity purchase, a used car, and when times are tough, the used car market usually does okay. And new car supply is obviously not back to normal either. So I think in general, retailers are doing okay.
That's an interesting point you make about that necessity of purchase. So the car buyers out there who have actually committed in October, it's because their car is old. It needs replacing, isn't it?
Yeah, I think there's definitely some of that, and that's what I say about the aspirational purchase. Maybe that's been put on hold. Maybe that's not sort of front and center at the moment. But
Yeah.
if you need to buy a car, or you think maybe it's a sensible thing to do to buy a car before you need to, maybe then that necessity purchase is still going. So that's potentially why sort of cheaper cars are doing well. That sort of lower price point, those 10-year-old cars. I mean, you can get a really good 10-year-old car now, can't you, for reasonable-ish money. So and very reliable. So that it's going okay.
And briefly, I mean, we talked on pressure on margins starting to appear a little bit last month. Do you think that's, has it continued, or is it because there are reports of a little bit of overage creeping in to some of the dealers, and that retail market, although it's not dropped off, it's just getting that a little bit tougher. How are margins? What's the feedback on margin retention at the minute across the market?
Yeah, there's certainly some pricing adjustments being made to retail. So if October was slightly worse than September for retail values and for retail demand, then and trade was okay, then you're going to get a bit of a squeezing on margins again, and that has happened, and that's probably been going on for a couple of months now, where you can't. So you're still having to pay strong money for trade. You can see that by just a very small drop, 0.5%. And so you're having to pay strong money in the trade, and you can't push the retail values up because the consumer demand isn't there. So the natural thing there is that margins are getting squeezed. But dealers have done very well over the last year with margins, so I don't think there's any disasters there. But it is there's normal activity happening where repricing of cars that have been in stock for a while, and just that's sort of normal behaviour really. So I think that's essential, that you keep a close eye on vehicles that aren't moving, and that's what dealers are. They're having to work hard, I would say, at the moment.
And Derren, what are your expectations on trade values over the coming weeks and as we go into the last 2 months of the year? Because it's not unusual to start seeing bigger drops certainly in November, is it?
No, I think we will see more of a drop than we've seen this month, but I don't think they'll be to the level that they may have been in previous years. You can sometimes get in sort of November and December, you could get combined maybe a 5 or 6% drop. I don't think we're going to get that this year, because I just don't think the supplies are out there, and we're not really seeing enough weakness in the data to suggest that that's going to come. Of course, it might do, and you can see the market can drop away when the clocks go back. So when it gets the darker evenings, maybe less people out looking at cars in the evenings. So I think you can. There probably will be a little bit of weakness as people start to focus on Christmas, and obviously if they've got less money in their pocket, that might be where the money goes. So I think demand will drop away, but supply is not going to be heavy enough for it to cause a huge crash in values or anything like that. So I would say that with some caution, there will be some value drops over the next couple of months, but probably not to the levels that were maybe predicted a few months ago with those big concerns over cost of living, because it hasn't really materialised yet, and there's not really any signs of that coming.
Yeah, so I mean, it's certainly going to be interesting in with your comments earlier. There's a little bit of holding back around nervousness of stocking up ready for a normal heavy start in January. But as you've said right at the start, there's no stock coming in. There's no tsunami of products on the horizon. We might see little pockets, but nothing significant. So I think we just need to stay calm, don't we? I think at this stage. So some interesting points there, Derren. I mean, as always, I can only thank you for coming back on. I said last month we'll try and get you on mid-month, but suddenly the month is over before we even get to speak to you about mid-month.
Yeah,
But it's moving that quickly. But just a reminder for the listeners, you can download the editorial. Just go over to CAP, a website which is cap-hpi.com. Or just get in touch with Derren. It will be on his social channels and available to download from there. And as always, Derren, I mean, it's been an absolute pleasure getting you back on, and it's going to be interesting to see what the market looks like next month now, and get you back on in November and see how it's performed.
Yeah, sure. It's a pleasure. Yeah.
Many thanks for coming on, Derren. Unfortunately, that's all from us. You've been listening to a special weekday Motor Trade Radio podcast. We're back with the week's car retailing headlines on Saturday. Until then, it's goodbye from me.
And it's goodbye from him.